Greetings, everybody. This is Jeff Scott, and this is my weekend review for July 10th. What a week we had. It was a great week for growth stock investors. I'm sure it was a great week. I hope it was a great week for all of you as well. Those of you that had bought White Wave when I said to buy it, I had taken half off when I hit my targets, but I still had a nice position on. Had a great week, too, because it got taken out at a big premium. Always nice to see that happen. I entitled today called Eureka, and Eureka is one of the indicators we got from Ian Woodward, may rest in peace, which is a exuberance in the market, or a bullish exuberance in the market. We'll talk about it a little bit later today, but Eureka we fired on Friday, and one wonders, are we at the verge of a new bull market or a bull run? As always, disclaimers, this is for education purposes only. Any recommendations I make are in the spirit of education and not investment advice. Remember, I'm a doctor, not a broker. I am not licensed to tell you what to buy, when to sell. I don't tell you when to sell or what to buy. I just show you how I make my choices, and that most physicians lose money with their investments. I am truly independent. I use certain tools. I like to support the companies whose tools I use, but I still pay for the tools. Why would I support somebody by talking about them when I paid for their product? One, I don't need any more money. Two, if I like a product, it's important for me to keep that product updated in the market. And I look at my support of companies like HGSI and EdgeRater and some of the John Person stuff that I love as ways to help their businesses improve or maintain so that they can continue to support my needs, which is continue to make great software. Tradings involve risk, and you alone are solely responsible for any investment decisions you make. Be your own guru. I have always liked to start, and with respect to the influences on my style, I started by learning CanSlim. I think that book is an excellent book, even though I do not believe that CanSlim has been working. In a market that's been down to sideways with some fairly substantial pullbacks since the beginning of last summer, it has not been a time to get rich up to now in buying breakouts. Morales and Catcher built upon what they learned from O'Neill with pocket pivots, Bible gap ups, also a great book about short selling, which came out right before the market was topping. This here is Ian Woodward. We lost Ian a couple months back. Ian was just a brilliant man, a teacher, a trader, and just an all-around super person. Much of what I do today is really thanks to Ian. Ian spent years listening to O'Neill and improved upon him, partnered with Ron Brown and then George Roberts of HighGrowthStock.com to take some of the things that he learned from CanSlim, improved upon, and put them in technology. Down here's my buddy, George Lee. We share podiums fairly often and frequently converse about the markets. To the right is sort of the things that I've been doing of late to improve my trading. So it's not in lieu of, instead of, or a replacement of HGSI, but the things that I learned from John Person have taught me to be a much better trader. He is an author, a trader, a mentor, and fortunately, since I moved to Palm Beach, become a good friend, him and his wife, Mary. John's just really down-to-earth, top-down investing, very clear, succinct trading style, indicators. We'll talk some about them today and talk about a special offer that I've secured for my followers. And then Van Tharp, who is the master of position sizing and money management. I own almost every program on the market. I have probably spent over $100,000 on buying useless technology and indicators. When it comes to the end of the day, I need a real-time platform. I need an analytic program, of which I use HGSI, and I use EdgeRater because it's got some ways of making my life more efficient and helping me drive signals quicker with less keystrokes. I need a seasonality program, of which my favorite these days is Seasonality Trader, although Best Choice is starting to be revamped as it's got new ownership. And I follow a number of websites. Here is HighGrowthStock.com. I put this here for a couple of reasons. One, in case I mumble and you don't know what I'm saying. But more importantly, they have a free 30-day trial. If they ask who referred you, just say Jeff Scott or MD Onk at MindSpring or HGSI Doc, any of my email addresses, so at least they know I'm out there supporting them. Again, I get no money from any vendor if you purchase their product. I don't want money. I think it colors my bias. If you go under investing strategies, you'll see a number of names. Ron Brown is the uber supporter of HGSI, and he has very frequent videos. Ron has taken HGSI and has supplemented with volume price or volume spread analysis. I've taken HGSI and supplemented it with John Person's work. This here, by the way, is Gil Morales, Morales and Catcher fame, who is also a user of HGSI. As I mentioned multiple times, John is holding a seminar on September 24th through 26th in Palm Beach, teaching people to trade the PUG way. Funny thing is, the PUG user group is a bunch of our users that came together a year ago, and many of which, well, all of which who joined the PUG group, purchased his lifetime indicators, and we were able to get a little bit of a discount on the indicators because we bought en masse. And we'll talk about that at the end, as I've been able to carry that to some additional of my users. I'll talk more about what the PUG benefits are, but all I can tell you about John is he's except for Ian, he's the best trainer, teacher I've ever had, and he's right up there with Ian. What's really cool is, it's the same thing with Ian. I used to wonder why I'd go to Ian's meetings, and a lot of times the material never changed. And I've learned as I've matured that when something works, you don't have to keep coming up with something new to sell, and you know what goes in your inbox. John hasn't changed his indicators in 20 years. He did come up with a couple of additions, which really, were nice this year, but for the most part, his PPS, his HCDs, his LCCs, and if you don't know what those are, stay tuned, haven't changed. Highly recommend it. Since I am back to work, start another business, I am not going to hold multi-day live meetings this year. I am going to add a day, Friday, September 23rd, to the front of John's meetings. Welcome anybody to attend all 4 days or just my day. If you are just attending my day, it's $400, including lunch. If you are attending John's meeting, I dropped it to $300, and I guarantee you'll get more than your money's worth. Stock patterns are cyclical. You need to know where you are. It sure feels like we're at this green circle, doesn't it? We have been sideways to down for months, and now it feels like we're breaking out. But the bad news or uncertainty is there's some big resistance right ahead, but we've got momentum. We'll see if we can get through. Where we are affects what you should do. I have gotten much more aggressive, but I do recognize, and at the end of the week, I started to lay off a little bit of the bullishness, just because we are approaching resistance. But this has been a time to start to buy stocks, buy calls, and take bullish stances. Again, we are getting to resistance. We need to be careful. That said, we did see a Eureka on Friday. So we talk about Eureka. Those that are can slimmers have dealt with something called the follow-through day from O'Neill. And it's when you have a day that occurs so many days after a prior up move, when you've been in a prior downtrend, and this is up 1% and more volume or so than the day before. It's too much math for me to remember. Ian came up with what's called the Eureka signal. This is the follow-through day for HGSI users. When we see it coming off of a bottom, we get very excited. It often signifies a strong rally is coming. When we start to see these after a large rally, it's a little bit excessive emotional exuberance and may signify a top. And it really signifies, using the NYSE, or you can use the NASDAQ as your index, a very strong day in the market. Well, this is what a strong day looks like. This was closing prices across the major sectors in the market on Friday. I like to show you what's working versus what's not working. It's hard to find something that's not working. This was broad-based, even though oil was soft at part of the week. Energy stocks finished the week strong. even banks, despite the falling interest rates, were strong, and perhaps that is because of the employment numbers. We'll come back to this. I also look at my think or swim charts. I do this every week, so you probably, if you've been here before, know what's coming. And by the way, if you haven't been here before, or you are here on a recurrent visit, I do the exact same analysis every weekend. I look at the same things, and then every night during the week, I do the same analysis for myself. And I try and get good at what I do, and I try not to vary it. And I do change it from time to time when I learn something new or something changes in the marketplace. So if it looks familiar, it's because it's by design. Here's the daily charts: the E-minis, the NQs, the Russells, the Dow futures, the lower left, the Russell futures. All four of these are bullish indexes, or indexes you would like to be bullish if you're a bull. And look how we're breaking out on the dailies across the board. We certainly broke above moving averages, and a little bit of overhead supply left, which we'll talk about, especially here on the Russell. But we are breaking out to new highs or near new highs on these indices. If the markets are doing strong, you expect the VIX to be down, and the dollar is struggling to get above the 200-day moving average. If I look at the weekly charts, again, the same type of a pattern. We are in PPS buy signals on daily and weekly on all the indexes. And again, the VIX came down to complacency, and the dollar is struggling with its moving averages. If I look at Trade Navigator, I'm not trying to be redundant. I just want to point out that not only are there green triangles on every index, meaning buy signals on the daily, buy signals on the weekly, we are now into buy signals on the monthly. So very bullish on the market, but we'll talk about that overhead supply. Now, what's probably driving the market is this slide here, where you can see that, the 10-year on the left going back to mid-2007, and setting all-time lows on the 10-year. And then this is the 30-year yield going back to 75. And in yellow is going to be what I'm looking at in all these subsequent charts. White is the spiders. And what you could see is that we've set an all-time record low on the 30-year bond. If you can't make money on interest, you're going to find and chase yield in other places. And that will drive us to I believe that will drive us to higher highs in the stock market. It's also causing craziness in the bond market. One wonders how sustainable it is. Put some Keltner channels on the TLT and you'll see how extended the TLT is. Interest rates low. Now, I expect this week to hear talking heads trying to talk up interest rates from the Fed by talking about how great the employment numbers were. They were Goldilocks. They were great numbers. They were a big surprise. That's why the market rebounded. But the best news is, if you're a bull on stocks or equities, is I think the Fed's handcuffed. Can they actually do anything about it? So as you might expect, falling rates are good for those that are interest rate sensitive, bad for banks. And this week, what really stood out among those was probably home builders. Really showed a lot of strength. Russell, I like to break out the Russell 2000 and 1000 to look at small stocks versus large stocks. And again, yellow represents what I'm measuring. White is the S&P. And you could see that in both cases, there's participation of both the small stocks and the large stocks breaking out to new highs on their AD line. That's very bullish. I look at the NASDAQ. This one is a little bit different. As you can see, the NASDAQ 100 here is breaking out again to further new highs and AD lines. Now, the overall NASDAQ is a laggard, and it's a bigger, large group of stocks, a lot of penny stocks perhaps, or cheap stocks. But the good news is it's starting to participate, although it's lagging from an AD line compared to the big stocks. Looking at stocks above the 200-day moving average on left, getting in, I guess, about 65% here, and over here, stocks above the 40. So the good news about this is we're getting to the point where more and more stocks are in uptrends, but we're not necessarily getting to the point where we get a clear-cut reversal. If I look at a 3-month new high, new low ratio, we are getting up near the top. So this is one indicator that says to me that we're getting extended. It's just one indicator among many indicators I look at. It doesn't mean we're going to roll over, but keep in mind we are getting near resistance. The McClellan oscillator is, I think it's about 130 if I remember correctly. Not as far as it can go, and one would expect it to perhaps peak out before this market rolls over, but that could happen in a day or a week, and it signifies more participation in the market as well. Talking about participation, here's how we gone from extremely bearish on the 27th 2 weeks ago with 60% of the stocks below the lower Bollinger Band to a rebound on July 1st, and to now we're 80% of the stocks in the S&P 1500 are above their midline Bollinger Band, and about 15% are above the upper band. This is an extreme where my arrowhead is. This is getting close, but it's not an extreme yet. I have found that when I get extremely oversold conditions on my buckets, the market bounces within a couple of days. When I get overbought, I go sideways. I don't necessarily sell off. No Hindis this week. I will point out that we've got over 9% new highs on the NYSE. The bulls make a statement, and you could see on the Woody indicator slide, we had kahunas across the board on Friday, shifting everything on the percent B to green or buy, and the percent B times bandwidth also to green. So we'll see if we can get a run. Wouldn't it be nice to go back to here, the run that we saw, I guess, in February and March, where we actually had a solid green for a while instead of the chop that we've been living in most of the other time. Canaries in the coal mine. These are some of the major leaders as listed here. Ian taught us to put together a list of great stocks. In this case, the market leaders from about 2 years ago, and they've been a great symbol of whether the market will be going up or going down. And as I said last week, and I was correct, they were on the verge of a breakout, and they did break above the PSAR. Here's that Eureka I mentioned that shows up on our charts. Everything looks good here. Coming out of a squeeze, the canaries look to go higher, led by Amazon as we go into earnings season. Know your news and EPS dates. You know, it's funny, the news seems to be a lot less important since Brexit, and I think there's so much fear about that the Fed has and resistance to raise rates that the news is all about the rates. And obviously there's some important things here on energy, CPI, PPI, big surprises might change the Fed's opinion, but a lot of people think the Fed's on the sidelines to September and possibly even December, and that there's no more than 2 hikes left for this year, if any. And you put all that together and rates are low, markets go higher. And on the earnings front, you could see we're starting to kick off earnings season with Alcoa, which is no longer the bellwether, on Monday. But you can see a couple. CSX perhaps give us some insight into trains. I like the chart of CSX this week. I won't buy it before earnings. Delta Airlines kicking off on some of the airplanes, some of the banks. So it's a judgment call whether or not you hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. I don't care if you use HGSI, TradeStation, Thinkorswim, Warden TC2000. Each of them have vehicles or indicators that can show you earnings dates. Market thoughts. We brushed off Brexit, broke out through, and now we're getting to resistance. Interest rates hit multi-year and lifetime lows. AD lines at on-balance volume are leading the market. This is bullish and suggests new highs in the future. Market participation is improving. Now, the downside is we're getting into seasonality, and we've had our summer rally per se, and the question now is, will we start to sell off going into the fall? So seasonality is a negative, but this improving economic news in the face of a handcuffed Fed is feeding that rally. Again, I mentioned the talking heads. Lots of bullish stock as we're getting close to the 2015 highs and resistance. Let's talk about resistance. I showed you this last week, and we were over 1, 2, 3, 4. So where my arrowhead was where we were last week. And I talked about 1, 2, 3, 4, 5, 6, 7, 8, 9 times at least we have failed to break through resistance. I looked at the closer resistance reflecting the highs since July and August of 2015. I looked up here reflecting the highs in the market back in April and May. We are now right below those May highs. We powered right through the 2016 highs. This is key. If we can break through, if you're bullish, this is what you want to see. You want to see us get through this very quickly and then probably pause a little bit to refresh, test it, and move forward. If we can get above this resistance zone, where we're sitting right at the top of right now, and stay above it, I would expect this to turn into pretty strong support of the market. Right now, until we break through, it's still very strong resistance. So, this is the line in the sand. I'll be watching it. I suggest you do too. Typical agenda, top-down review, show some of the different things that I do, give you some stock ideas that I'm looking at, my chart of the week, and then I have a special offer. The Plug User Group, we formed again, I mentioned a year ago. What happened, we had a meeting, John spoke. His indicator package is not inexpensive. And I called him up after the meeting and said, I got 17 people that want to buy it. Can we get a discount? And what I told the 17 people is that we'd start a user group to support him, which we've done. John's actually been a big participant and driver of that. And I'm trying to do the same thing this year by getting as many of my followers to come to his meeting. And the more I get, the better deal I'll be able to get you and try and pass off whatever benefits I can get. So we'll talk about that special offer at the end. He doesn't discount it. I'm only doing this for my followers, so to speak. Again, the meeting I already mentioned, hgsidoc@gmail.com is my email. We'll come back to charts of the week and we'll review what we looked at last week, which is in a flag and hasn't done much, and what I'm looking at this week. So, first thing I like to do is go into TradeStation, take a look at the health of the markets. Let's go into my market force and divergence. As I said last week, I'm looking at 5 different things here. I'm looking at the color of the paint bar. That's an Alexander Elder indicator. A green paint bar says it's okay. Oops, hold on one second. Okay, I'm back. Sorry about that. So again, I look at the color of the paint bar in the various time frames. Green, according to Elder, the buying window is open, so I could either be holding or buying. Red, the selling window's open. I could be selling or holding. Blue, is my choice. I look at the Elder envelope, and what we talked about last week is that stocks can ride the envelope up for some period of time, but when they get very extended above or below the envelope, they like to pull back in. Then, switching over to the John world, I look at the arrows. These are the John PPS indicators, the sell in red, buy in green. I look at these little dots here that you can see on top of the paint bars, and those are suggesting that there's some MACD divergence. Now you notice that the MACD divergence can go on quite some time before the stock pulls back, as we saw here. And then lastly, I look at the high jump. Only look at high jump in stocks that are in uptrends, not stocks that are in downtrends. And this tells me that the extension of this instrument from its 1750 and 200-day moving averages when combined is the highest it's been in 200 bars. So let's take a look at the market. The NASDAQ not yet to new highs. 5,000 is probably going to be the line in the sand that I'm going to be watching to see if it can get through for near-term resistance. Certainly looks strong here with a daily green and a buy signal. In fact, daily, weekly, and monthly. Weekly on top, monthly on the bottom. Both Elder and John signals are giving a buy. We're at 85% on the high jump, so we're not at the top, and we don't see any obvious divergence right now. Again, you saw the divergence here, and the market sold off. Getting near the top of the envelope, but as I've told you, stocks like to walk up the top or indices that envelope. Take a look at the Dow. The Dow, unlike the NASDAQ, is much closer to prior highs. In fact, you could see the all-time highs are in this area and 17,840, let's see, 18,288. But we're getting close to all-time highs on the Dow. The Dow, interestingly, and I don't want to look at something from December. Okay. Green, green, green in a buy, daily, weekly, monthly, 90% on the high jump, no divergences. The Dow looks strong. S&P 500, broken record, 3 buys, 3 greens, 97%. So again, we are getting extended. We're getting up close to those mid-year highs last year. There's clearly a risk of getting some resistance at this point. But right now, there's no fleas on that. Market looks strong. Let's take a look at the Russell. We'll look at the IWM. Hold on one sec. I'll do a quick response. All right, so IWM, everything's green on buy signals, 89%, no obvious divergences. So I don't think I've been seeing this bullish looking a market in a long time. My concern is on the big stocks especially that we're getting close to resistance. Very quick run through the sectors. Materials, a buy and a buy, but on a weekly still on a sell, although it's a little higher than last week, and it's a blue bar. Energy's probably causing that. Now, interestingly, energy, despite the strong market, actually went to a person sell signal on Thursday, still in a longer term buy, weekly and monthly. So energy a little bit weaker. Financials went to a buy last week. Green has a green paint bar in the weekly, but still on a weekly sell, on a monthly buy. So financials are like materials, have some intermediate term weakness. Industrials breaking out all across the board, buy signals in green. Now, you notice we got that first MACD divergence dot popping up there, and you notice we're making a little higher highs here, and you can see the MACD just barely turned positive, so that'll be something to watch. XLK, which would be technology. We're setting green in a buy, daily, weekly, monthly. This is a strength that we're seeing. So far, I would say technology looks the strongest. Clearly, a lot of technology stocks looked interesting on my weekend review. Staples have been the strongest. You can see the MACD divergence there outside its envelope here at 100% on the high jump. So this group continues to go higher. Things get more extended before they fall. Staples continue to lead, but with that amount of extensions, just be careful. Utilities were in this place last week, and they still got divergence. They're still on buys on the weekly and the monthly, but notice they sold off starting on Thursday as they got way above their envelope and broke out above 100 to 100. Healthcare, it'd be nice to see this lead the market go forward, especially biotech. And look at the run healthcare has had over the last couple of weeks to the point now where it's above its envelope, although it's in a buy daily, weekly, and monthly, and at 100% on the high jump. So healthcare and staples currently are breaking out big time and leading, but they're getting extended. And then lastly, discretionary, another one with a big move this week, but it's got some divergence popping on the daily and the weekly. So, I'm not surprised to see either the divergence or the fact that we're getting above the bands. This market's been on fire, and it's had a huge move off the bottoms. We'll look at some of that when we get to HGSI. But when you go into the big scope of things, and I go back here, this is where we were in May of 2016. We're just getting back to where we were. So this is a lot different from between March of 2009 and May of 2016, perhaps. We've had a 20% intraday correction. We've struggled to get back to those old highs. And with interest rates falling, no raises on the horizon, do we go on to new highs? It's going to be a crazy election year. And I guess one thing to remember is bull markets climb a wall of worry. And when you think about it, we've got all the terrorism events throughout the world. We got the racial unrest issues. We got the murder of the policeman in the U.S. We've got Brexit going on. We've got two candidates that may not be loved by the majority of the populace running for president. But that's the wall that a bull market likes to climb. So, all right, let's go into HGSI and take a quick look at the markets. The first thing I'm going to do is go down to Major Markets Plus and go to the T view, which is price and volume heavier towards the last day, then week, and then 3 weeks, and see where the strength of the market is, rank it by raw combo. And one could see on the bottom is the energy stock, gold, gasoline and oil. No surprise, energy was a little weaker. Volatility in the dollar. When you see that, gold and silver are going to be up at the top, which they are. And the stocks, NASDAQ up near the top here as well. Small caps, mid caps. All right, so then I take a look at, start with the S&P 500. So I'm going to start with a view that has a lot of indicators, then I'm going to switch to something else. So what I want to show you here is this is the Eureka. Notice that we had a Eureka here on the bottom. And we had Eurekas back here. Now, is this a Eureka that shows that we're extended and near the top? Too much exuberance? It might be because we've had a big run. But we're certainly not at multi-year highs. We're not at all-time highs. We're not extended from prior highs. So I'm hoping that this is just another sign of a market that's ready to roll higher because I'm still net bullish. My bongos are positive, are green on the market. We had a mobile breakout on Friday. And then this is a kahuna, which is another momentum indicator, which was positive on all the major indicators. So let's go take those off and just look at this. So now I'm looking at a 200-day moving average in red, a 50-day in blue, and a 17, each of these simple in green, 8-day exponential, and let's give us some data. So this is what I showed you before. So let me hit it one more time and go down, well, let's look at March of 2009. All right, here's where we were. Let's just give some basic estimates here. From the lows to the highs, we had a 200 plus return. From the highs to the lows, we had a 15% or so on closing markets pullback. As I said, lower intraday. And then back to the highs for this little pullback, a 17% return. We are still below the prior highs, and we need to get back through them. Now let's do this. Kind of look at a little easier to be exact. So we basically have broken almost back to 100% recovery. We're a little bit less. This has been a major move, and just feels a little bit to me like it wants to go higher. Hope so, because I'm bullish right now and I've got some long positions. But as I said before, we've got some resistance. So here's the S&P. Again, close to breaking out. The Dow Jones Industrials approaching old highs. NASDAQ not quite to old highs, but a big move up on Friday, gapped up at the open. And then the Russell. Hard to look at this and not see a market that wants to go higher. All the indexes above their major moving averages. What's struggling? The dollar failed at the 200, pulled back. As long as that dollar stays below the 200-day moving average, that's probably bullish for the market and for the metals. Volatility, getting back to that level of complacence. Now, we know that when the VIX rises, move to the side. When it falls is when you want to go long. It's down to where it usually rises from, but it has a tendency to stay here for months. So I'm going to be watching the VIX. And then, as I said, weak dollar, strong gold, and silver. I hope some of you are playing this game. Nugget has had just a major move after breaking out around 50. It's now up to close to 170. So next thing I do is I go down to the industry groups, in which I see there's 172. And we see of those 172, 90 of them have forced to the upside. And then I typically will go through the top stocks in each of them. No surprise, precious metal. Interestingly, all of them are weaker than the index. Let's just look at a couple of them. And we're going to switch now. Remember the same moving averages. Now I'm adding a bunch of goodies. I'm adding the Eureka in, which is only on the NYSE, so that just tells me the market is strong. I've added in Kahunas, which is momentum, mobile breakouts force, and then this bar up here, which you don't see many, is Bible gap ups. The high jump bar, red candle low, green candle high, and then the bongos, accumulation distribution, and the force. So here is First Majestic, small amount of earnings, big movement as the price of metals have gone up. It's run from 3 up to 16. All these are getting nosebleeds. All these will roll over at some point, but they all feel like they're going higher, and as long as the Fed doesn't raise rates and economy is improving. Same thing with core mining. I thought it used to be Corleone, but CDE has run from about 2.5 to nearly 13. These things have had great runs. Silver Wheaton, Royal Gold. I mean, I just assume at this point, if I'm going to want to trade them, buy the ETFs, the leverage ETFs, because they're all extended. You're not going to find very many cheap gold stocks as far as inexpensive, maybe price cheap. AUY, for example, is less than $6. It's got the exact same price curve as some of the others. IM Gold, I don't know I can't remember the ticker. Let's see, KGC, Kinross Gold. Kind of like setting for a cup here. Again, these are cheap stocks compared to the leaders. If you had been smart enough to have bought American Barracks when it broke out, you would have got in at around 7 and be sitting at about 22. So precious metals working well. Be careful. At some time eventually they'll stop working. I saw a lot of interesting semiconductors today. When I did my chart review, NVIDIA is one of the big leaders right now, breaking out again. It is extended. It's getting close to the high jump. Everything is green. It had a kahuna on Thursday as it was breaking out. Intel looks like it wants to go higher. Keep in mind, earnings are out July 20th. That should dictate direction. Here's one that I'd be careful. LEDS, I think there was some news, some investment, but stocks don't usually run from 2 to 10 in a week and stay there. If one looks back in the history at Plug Power, Intercept Pharmaceuticals, this type of pattern may ultimately end well, but over the short term, these things have a tendency of going the wrong direction, meaning coming back a little bit. Micron Technology, I don't need that much. Been in a long-term downtrend, doesn't excite me. Broadcom, this one does. This has been a great stock over the last several years. It has been kind of loose of late, and you could see it's bouncing off its 50 with a kahuna and a pocket pivot. Bongo Weekly is green, that's or red, which is the only thing that bothers me. We'll see if it can't lift off this week. Go get that. I'll be right back. All right, so Broadcom, I like stocks. Let me just back up a second. Whenever I get a phone call or a text that I have to answer, I get distracted. But I personally like buying stocks that are in long-term uptrends, who have pulled back to support, big support on the 50, that show momentum. And here's a kahuna and a pocket pivot. I prefer to buy stocks when the Bongo Weekly has turned green. I'm willing in this case to allow a little leeway, because if the market trades up, it'll turn green this week. But I do like Broadcom, AVGO. Qualcomm's another one that looks very attractive. A kahuna, breakout above the 200, or above the 50 rather. Mobile breakout from a squeeze, its bongos are green. So there's some things to like in semiconductors. Communication equipment. This is I think this is a company that was in one buyout and they dropped them for a better deal. So that's not something to look at. This is going to be an interesting story as to what does Apple do. What Apple does tell you what the market will do. You look at the fundamentals. I'd use the word of my generation, they suck. Earnings per share, not a lot of growth. There doesn't seem to be a huge amount of enthusiasm for the i7. Seems like be incremental, not a massive improvement. It does pay a dividend. It is widely owned. If you want to go on a longer term perspective and look at the weekly chart, it is pulled back to an area that should hold as support. It held as support on June 13th, in this early January, April, and now July of this year. So this is a place that you would expect Apple to bounce. A bounce in Apple will lead us to new highs. If Apple breaks down and fails here, then I don't think this market's going to go too much higher. Mitel Networks, this was involved in the Polycom arbitrage. Cisco, another long-time sideways play, looks like it's trying to set itself up to break out. So you see some more strength in the technology space. Banks, kind of interesting to see this, considering that the interest rates are so low. A lot of these are international banks, BBD. Hard for me to jump into banks at this point. You can see they've been beat up. I mean, instead of finding a bank necessarily to buy, here I might be looking at an ETF like FAS, if I really believe financials are going higher, or XLF. If I want to find regional banks, KRE. None of these look like major upturns ready to break out. So I'm interested to see the banks there. I'll believe it when I see it. REITs are benefiting from the low interest rate environment. And there's a lot to like here. This is one that goes sideways through a big channel, Avalon Communities. It's got earnings per share growth coming in, pays a 2.9% dividend. General Growth Properties, breaking out to new highs, all green. Modest growth, 2.5% dividend. Host Marriott, again, breaking out from a descending trend line. All green, mobile breakout, 4.8. I'm not a big REIT guy. I have a couple of REITs that I just hold on to. My favorite REIT is one that I turned you guys on to, which, let's see if I can find it here. Of course, it'll be down at the bottom today probably. Let me just open up. Well, one have been the various self-storage companies. This isn't the one I own. Let's see if I can find the one I own in here. Public storage, same basic pattern, pays a 2.8% dividend. It's been had its lumps of late, but you can see a huge uptrend, pull back to support in another move. And the one that other one I've told you about has been Cone, which is Cyrus One, which is a technology and and a REIT play where they provide a lot of the colos and technology centers. And it just goes up, flags, a flag, up, flag, one at a time. This has just been a great stock ever since I introduced it to you all about 40 as one of our charts of the week. So selected REITs look good. Interesting with even with energy cheap, some of the energy stocks pulling back to support. Southwest might be an interesting buy point if energy holds. Pioneer Natural Resources. I'm looking for things that really scream at me. Range Resources is one of them. Notice that the weekly bongo has stayed green ever since it broke above the 50-day moving average here in the 25 range. That will be my guide of when to get out of this stock. I am in it. It looks like it's ready to roll again as it's consolidating on the 50. Same with Devon. So some of the energy stocks still look good. Big banks. This is starting to get interesting to me. Why are both regional and big banks showing up? Well, it probably has to do with two things. It probably has to do with the fact that their average volume in JP Morgan is 15 million shares a day. 15 million shares. Especially when what figures out force is price change times volume. So the banks have a lot of force to get them high on my ranking. Is this a growth stock breaking out? No. It's right below its PSAR dot, right below the 50, a little bit of momentum. You could break out above this and make a back challenge at 66, correct? I don't like the earnings per share growth, pays a 3% dividend. Citigroup in a downtrend, Wells Fargo in a downtrend, Bank of America in a downtrend. Again, hard for me to get uber excited. I guess JP Morgan, because it pays a 3% dividend, is at least interesting. Put these on a longer time range, and you can kind of see where I'm sort of bored as they've been sideways for 2 years now. But interesting to see both regional and big banks showing up with interest rates so low. Base metals been making money in these. I've told you about them multiple times. These been basing Freeport-McMoRan, basing below the 50. One of my favorite trades is my get on a plane trade, and my get on a plane trade is simple. I find a stock that's in a squeeze, that's right below the PSAR dot. By being in a squeeze, if I was to buy Freeport-McMoRan today, I'd buy it if it took out the PSAR dot, so that's about 1165. I'd put my stop below the lowest bar in the last 4 or 5 days, which would be at about 1025. So I'd be putting $1.40 at risk. That's probably more than I'm comfortable with, because that's about 10%, or a little bit more than 10%, 12%. But I could go on a plane tomorrow and say, if the stock takes out the PSAR dot, go long, immediately put the stop below the lowest bar of the last 4, set a 1-to-1 profit, and when I get off my plane in Boston, I'll adjust my stops if my trade was taken. Why is this a good trade? Because these trades work. The group strength is going up. The mobile breakup from a squeeze and a kahuna on Friday. Everything's green up here. This is a bullish pattern. To me, the buy signal will be taking out the PSAR dot. Come to my September meeting. I'll have you getting on a plane trades. Alcoa's got earnings coming out this week. Similar pattern, but I wouldn't touch it until the earnings are out. One of my big calls of this year has been Techminco from back here at 3, now up to 13.5. Again, nice uptrend. Not as exciting as the gold stocks by any mean, but I'll take the return that I've had in Techminco. Hopefully other people took it with me. Infrastructure stocks, AVG is a takeout. There's a couple things here that I like, though. Microsoft earnings are July 19th, so they're pretty close. Sitting right here at the 200-day moving average above the 50. I'd be looking for some momentum coming in here, but that looks interesting if you're into Microsoft, 2.8% dividend. Barracuda Networks gapped up on earnings. There's a Bible gap up coming out of mobile breakout from a squeeze, multiple kahunas and pocket pivots. This almost was my stock of the week. I decided not to take it because it already moved, but I like it. Next one down, telecom carriers. You know, what I actually own some CenturyLink, and the reason why I own it is I bought it back here. I probably should have sold it before the correction, but it's not a big price move. It came down a couple bucks, $3, about 10%. It pays a 7.1% dividend. It's been a sideways stock for a long time. The reason why I'm in this stock is because it pays a 7.1% dividend, and this group has been strong. Probably a better stock is AT&T, and it's pulled back to the 17-day moving average, pays a 4.5%. I'm a sucker for that dividend, and I took a pretty decent position. And, you know, sometimes if you need to have income produced, it's reasonable to, you know, you can't make it in the CDs or the bank. Bonds aren't paying any interest. There's some pretty nice dividend-paying stocks. CenturyLink is one of them. I think all the strength here has to do with the dividends. You can see that oil gas services are not far behind the top 10, as is specialty pharma and biotech. I want to look at a couple of, I'm getting to biotech, and I want to look at a couple of ETFs. So IBB is the biotech ETF. Obviously, biotech has been down. You saw the strength in XLV. If this market goes higher, perhaps biotech can lead. I've been talking a little bit about LABU, which I went long a couple weeks ago, and you could see it's had a nice little move off the bottom. Why did I go long? Because this is kind of where LABU falls back to February, March, May, June, and I decided to buy it off support. Notice the bongos have turned green. There's a lot of interesting biotech stocks. You have interesting positive like Celgene, which has been in a downtrend but looks like it may want to go higher. It's got big resistance potential there. Then you got Juno, the opposite of good, which is why you got to be careful with biotech. So you need to know news that are coming up. Other things that we might want to look at from I mentioned bonds. This is a very extended stock. You can see it's pegged its high jump bar here. TLT continues to go higher, which is the opposite of the interest rates. So I usually go through the top 10, and I build a watch list over the weekend, which, for example, this week was absurd. Since there's so many bullish stocks, my watch list was gigantic. I built a watch list of 640 stocks, looked at each of them. Let me show you what some of my favorites were. So I narrowed that down to 34 stocks, and I'm going to run through them right now and then show you my chart of the week. A couple other things that you can do is you can run various scans, which I'll show you in TradeStation. So Acuity Brands, it's an expensive stock. Pull back to support, breaking out. Kahuna, pocket pivot, mobile breakout from a squeeze, everything is green. Dycom Industries, this is an industrial play. I've been in this for a while, breaking out to new highs. It's been an IBD 50 stock for some time. KB Homes, this is my favorite of the home plays. It's already had a move. It's got great earnings per share growth coming in, pays a small dividend. If you don't have a home builder, you might want to look at KB Homes. Home Depot, pull back to the 200-day moving average. This is my play. I like stocks in an uptrend. Pull back to support and go. Last time it ran back up to 135. It looks like it's doing the same thing. Can it break higher? Remains to be seen. Avis Budget Group. These things have been dogs because of the Ubers and the Lyfts of the world. But you look at the longer term, the bongos have gone green, stocks put in a little bit of a rounded bottom here. And I look at the daily chart and I see a stock breaking above the 200. Everything looks green with a kahuna. AMN Healthcare Services, um, breaking out to all-time highs, still got good earnings per share growth. Top Build, another one, uptrend, sideways, breakout, kahuna, pocket pivot, mobile breakout from a squeeze, good earnings per share growth. Nordson, a little bit different looking chart. Well, actually not. Pull back, sideways. Sitting right below the PSAR dot. Pocket pivot and kahuna, one of my get on a plane trades. CarMax, been in a pretty profound downtrend for a while. Looks like it wants to go higher here, and it broke above its 200-day moving average, as you could see here, with a kahuna, everything turning green. Hertz, similar pattern. See anything else here that I really want to call out as being exciting that we haven't talked about before? Amazon, I'm long Amazon, been long Amazon. Amazon's got some earnings coming out, so I have to, here's how I would assess the seasonality on Amazon. As I mentioned, there's lots of seasonality programs. I like this one. I'm going to type in Amazon. This is called Seasonality Trader. I am going to change this to earnings seasonality. And what do I see? I see that earnings come out somewhere around, I think it's the 28th, but whatever, it's in this period of time. That the scanner did not pick up anything robustly bullish. We're about to start in August, where we've had 10 out of 10 positive years, average return of about 10%. And I think that Amazon's going higher. The yellow line is the 10-year seasonality curve. The green line is the 5-year seasonality. And they're both going up. Reasons to consider being long. Now, some of you might be using, for example, Magenta Trader. Let's see if I can even get into it. Take a look at what the seasonality shows there. It should be the same, but they use different algorithms. I don't go here that often, so I got to figure out where they put, here it is. Yeah, that's interesting. It's interesting when you have lifetime software and data that you, let's try this. Magenta Trader and Seasonality Trader, they used to have a relationship together, and that the owner of Seasonality Trader used to be the developer for Magenta Trader, and they split a while back. Well, not letting me on anymore. Well, that's a problem. Don't like it when you pay for lifetime ownership and then it disappears. So Amazon.com, I think, goes higher. Let's go back to my charts of the week. So I started this just to show you how I take this data and I execute trades. I don't keep track of them. I talk about them typically the next week. And again, it's not for you to take the trades. It's just to show you how I think. Last week I looked at Medallion Financial. I liked its break above the 200-day moving average. I liked the fact that it had new PPS buy signals and strong volume. Of course, I took the trade on Tuesday, and it traded down the rest of the week until Friday. The white line is my buy. Here's my target. Here's my stop. I am in the trade. I'm down about a nickel, and I'm still long. I look at this as a flag formation. I still like everything I see and looking for it to break out. This week, I'm going to pick BCC, a similar pattern but not as extended. BCC is Boise Cascade. It's consumer discretionary, retail discretionary. Retail showed some movement last week. You see the group strength here, breaking above the 200 here. Everything's greens here. Mobo breakout from a squeeze. I do not pay attention to the high jump because it's not extended. It's just trading back to the 200-day moving average. A big kahuna there and a eureka in the market. When I looked at it in TradeStation with John's indicators, I see a high close doji and a PPS new on the weekly. OBV broke above its downtrend, and so I see that as a very bullish. PPS daily for some time. OBV heading up. So I'm going to go long at 23.95, which is the white line, which is above the high of the day on Friday. I'm going to set my stop at 22.15, which is risking 7.5%. My target, which is above the top of the chart, so we're not going to see it here, is at 25.75. And the way I've been managing my trades is I'll take half off when it hits the target, raise my stop to break even, and ride it the rest of the way. In closing, as I've mentioned before, I used to hold a couple of live seminars. At my live seminars, John used to speak, and it was a great treat. At the last one, after he left to go out of town, I talked with a bunch of my attendees, and we got together, and close to 20 of them bought his lifetime package, which you could see is $3,500. And I was able to get them a nice little discount. I've had a lot of people ask me if I can do that again. So here's what I can do. I can put together an offer of my seminar, John's seminar, my indicator package, which I do not otherwise sell, John's lifetime package, and membership in the PUG user group. As I said, it's not inexpensive. The value for this package is $5,878 based upon average listed prices. By the way, I didn't make up the 500. I don't charge for my indicators, but if I did, they'd be a lot more than $500. If you don't currently have his package or are interested in his package, I've got enough people secured that I can give 20% off this package. A little bit over 20%. Email me for more information. If you'd like more specifics, I'd be happy to respond back to you. I think this last comment is a guarantee. You'll go home on September 26th, a better trader with the appropriate tools to enable your success. Somebody asked, what do you get with this package? How do I find value in John's package? First thing is the scanner. So I showed you a lot of great stocks. The scanner in TradeStation can scan in any time frame. Every night I run a number of scans. My favorite scans are buy 5. Actually, go to buy 2 to start. Buy 2 will be stocks in an uptrend that have pulled back to support and have a buy and get a buy signal. So weekly's in a buy. They pull back to support, and they get a daily buy. So let's just pick one. Actually, HGES is a mining technology company. So by definition, the stock's in an uptrend. Here's the weekly, here's the monthly. It's pulled back to support, and it had a new buy signal. So I can scan the market looking for great stocks. You probably can figure out that one of my favorite buy signals is a high close doji that occurs when OBV is heading up. So let's take a look at what some of the ones that I found this week. $79 of them had high close dojis. Now most of them don't have the right OBV. So let's look at Sale. This almost was my stock of the day. So Sale has been in a downtrend. Okay, here's monthly, here's weekly. It had a high close doji on Friday in the setting of OBV leading to the upside. OBV strong on the daily. It's in a weekly and a daily buy signal. I like this a lot, and I almost took that trade. Now, buy signal 5, which is a new thing that all PUG members, I'm not sure, I don't think it's made available for all the PUG members. I think it was an add-on, is pretty cool because this is going to look for stocks that have a daily buy signal with an OBV that's going up. So let's look at Tractor Supply, for example. So OBV is clearly heading up. It's about to break out over its moving average, and I had a new buy signal. So I'm able to scan for stocks that have certain criteria. Yes, in Thinkorswim I can scan for a PPS, but HCDs and scanning for coming at the pivots are not part of the Thinkorswim platform. I can look at the radar screen, which is another great tool. Sometimes my Siri hears me talk and starts doing scans. This is the radar screen in TradeStation. And I have some of my favorite indicators back here. Bible gap ups, pocket pivots, mobile breakouts from a squeeze, green candle lows, red candle highs. And I've got John's indicators in multiple time frames. And I can watch during the day. And on my higher resolution monitor, the whole sheet comes out. And I can look for new breakouts. I can look for new high close dojis. I can look for trend changes on daily, weekly, and monthly. Again, I cannot do that on Thinkorswim. So essentially, I have the ability to monitor in TradeStation 1,000 or so instruments during the day, looking for evidence of new signals for buying and selling. What else can I do? I can look at the market from the perspective of breadth, from a volume and an AD line. And John's been able to break out separate AD lines for the various indexes. So for example, NYSE AD line in pink making a new high. The NASDAQ AD line OBV new highs. So I can get a sense of market breadth and market strength. So you get the radar screens, you get the scanners, you get the charting indicators, you get his special OBV indicator and his advanced decline indicators. Everything that I use all come with his package. So I'm not a, what's the word, a network affiliate where I get a piece of the action. As I said before, I don't need any more money. I don't take any money from you. Any consideration that I might get is what you get as a discount. So the more people that are interested, the better argument I can make. Please reach out to me. I use it constantly. It's the perfect supplement to HGSI. And again, I'm not here to sell anything to you. I get no money. In fact, since I'm giving away my indicators, I'm losing money, so to speak. But I think it's good to make people better traders. So give me an email, hgsi.gmail.com if you're interested. Everybody have a great week. Let's see what happens when we get through resistance. Thank you.